Hey there, traders, and welcome back for episode number 147 from the Stock Bandit. Sure glad that you've joined me for this episode. Now it's Sunday and we're heading into a brand new week of trading. It's time once again to stop and take a look at the major indices and kind of see where we are. Let's assess the situation here on a technical basis. Let's eyeball some key levels to watch in the days ahead, because we know that's what's going to influence how individual stocks move, and that's really where the good money is. So last week was a really important week, and we had just prior to that seen a breakout here on a very minor basis on Friday of the week before. So Monday we saw a good solid surge higher. Then on Tuesday, Wednesday, Thursday we did dip a little bit, but then Friday we gapped up once again and pushed on through to the closing bell to go out at new recovery highs. So we've come right off this 2100 area at the end of August. We're now at 2381. That's a huge run. Everyone is aware of that. And anyone who's been caught, flat-footed in this rally has essentially used every minor pullback, and those have been very few and far between, as you know. But they've been using those to put cash to work and try and get on board this kind of runaway move for the market. Now, the bulls have lots of things to hang their hats on right now. They've got kind of the hope of help from the Fed if things don't improve. They also know that if things do improve, then the market's going to have plenty of reasons from an economic standpoint to continue rallying. And they've also got lots of recent momentum. Case in point, this very shallow, brief dip last week, which was bought and produced new highs on a very quick basis on Friday. So, we are at the same time very extended here in a very short-term basis. Over the past, 3 weeks, we've rallied in a very big way off these August lows. September has been a one-way street to the upside, and we don't yet have any technical reason to expect that to change. However, we are coming into some important levels. Now, I want to bring those to your attention. The first one is right here from May 14th. We had a gap to the downside. Here, of course, was the May 6th flash crash low. We had this rebound for a few days, and then we kind of rolled over from here and had a breakaway gap to the downside. That, of course, led to new pullback lows from these April highs. Now, this unfilled gap that I'm really bringing to your attention goes up to about the 2394 level. We're only about 13 points from that as of Friday's close. So that's something to keep in mind. I am looking for that gap to very likely get filled, but once that's done, it might invite some profit taking. At the same time, not far above that is this mid-May kind of bounce high right up here, which is at the 2434 level. And then we also have the 2450 area that we broke down from in early May. So we're kind of approaching some very important levels here that may pose as some overhead resistance. Let's keep those in mind. If things happen to subside, if this momentum diminishes a little bit, we see some profit taking kick in, this prior resistance has been serving as some support in the short term. That's around 2307. Let's see if that level happens to get tested on a pullback. Right now it sure doesn't feel like we're going to get one, but this market will pull back. It will rest at some point. Let's see how 2307 gets treated if and when it is reached. For the S&P 500, this index pushed on through 1130 early last week. It then came back, gave it up on Thursday, only to reclaim it on Friday and go out at new recovery highs compared to these August lows or the July lows. So we've got intermediate term higher lows, we've got higher highs here at the same time. This trend is starting to be up. In the very short term, we're also a little bit extended here in the S&P. We've rallied a long way off of 1040. It's been pretty much a straight up move. We have seen just very brief periods of lateral rest, but no pullbacks. So we're now making new recovery highs here. This index is acting extremely well. We're coming up to some levels here not too far away that we need to watch. First one is this mid-May bounce high at 1173. Beyond that is this breakdown level right here at 1180, which is not far above that either. So let's note those levels, keep a very close eye on them, and let's continue to watch this 1130 level if and when a pullback happens to kick in. The Russell might actually be the biggest story of the day, which was that Friday, not only have we really confirmed this double bottom with this 587 level holding, but Friday we finally closed even slightly above this 670 level. Now we've seen multiple intraday attempts to do that, including last week, earlier in the week, and we never did see a close above that until Friday, going out at 671. So that's by no means a big breakout, but it is a very meaningful breakout. Let's see if the buyers can build on this. That would be extremely positive for this small cap index. Finally, the Dow making new highs again. This thing is starting to approach some key levels as well. We've got back here 10,920 is the mid-May bounce, and right above that 10,965 was the breakout area. So we're getting within about 100 points of those two areas. Those may pose us some resistance, but keep in mind the Dow is only 30 stocks. It's very likely to just kind of move along with how the S&P 500 is and the NASDAQ. So those are the two indices to keep a very close eye on. It is a very strong market. We need to see some rest at some point, but you can offset that risk of chasing extended stocks here by simply shortening your time frame. That's what I'm planning to do heading into this week. So thanks again for joining me for this video. I will be back soon with more videos, but in the meantime, trade like a bandit.